Hi, welcome. Hope you're doing well. Today we're going to talk about, is it better to use your emergency fund money or a line of credit? Obviously, in a normal situation versus a pandemic. So, in my book, Ready, Reset, Refocus, Preparing for Retirement, I write a whole chapter dedicated to the emergency fund. So, your ideal situation when you're doing your long-term planning is to build an emergency fund that eventually gets to 3 to 6 months worth of what you earn per month. And so then in an emergency, let's say the emergency is you lose your job, you have resources for 3 to 6 months at least to, maybe get another job or to reshuffle things. Sometimes when you don't have a job, your expenses are a little lower because you don't have to travel and such. So, but in a pandemic, a lot of people don't have that emergency fund. So in a crisis and an emergency, they may need resource. So they turn to lines of credit. Now, line of credit, obviously, you have to pay that back and interest accrues, and it's considered a revolving debt. So it's not like a fixed debt where you have fixed payments, it's revolving. So the interest can just kind of take off on you if you're not paying it down, but you can just pay interest only. So some people that I have worked with have proactively set in place prior to any potential crisis a line of credit on their home. So let's say your home is all paid off. Let's say you did not establish strong emergency fund resources and you don't know if you may potentially lose your job in this time. So if you do have income now, a good line of credit, if it was secured against your home, could be something like the Manulife One mortgage, which I'm contracted to do with them, so I could talk to you about that further if you wanted to. To reach out to me, just go to markalbertmortgages.ca. Happy to talk to you further about that. Now, the reason I like that one is if your house is paid off and you have no mortgage and you want to create a buffer just in case, you just simply get that secured against your home, and it actually has a savings account built in there. So beyond if you owe no money and you're putting money in there, it builds a savings account, right? So there's a lot of benefits to that product, Manulife One, and there's a video that I'm going to put as a link below that I interviewed someone from Manulife on that particular product. But the question is, if you're in a crisis or you anticipate a crisis and you don't have a line of credit, that might be something to help you in place. And the great thing is, if you don't lose your job, you don't want to use the line of credit. Really bothers me sometimes if people get this big line of credit and they feel like they just won the lottery, so they start spending money that they really don't have because it's credit. It's not money in your bank account, it's credit. So sometimes, like a young person, the first time they get a credit card, they might start just spending like crazy as if it's cash, but it's not cash, it's credit. So your ideal situation is always to build an emergency fund and use that in an emergency. However, if you didn't proactively set up for that and you're anticipating a financial crisis in the very near future, a lot of times people will revert to lines of credit. And so if you did want to get one secured against your home, I have several available to me through the broker market that I am within. Listen, stay safe out there. Have a great day, and I look forward to talking to you soon. Bye now.